What's going on, everybody? Welcome back to the channel. And today's video we're going to be going over the overall state of the market, everything that's been going on, crypto market, stock market, and what I expect to happen next in this next coming 1 to 2 weeks. I do want to touch real quick on Bitcoin first before we get into anything else. If you want to watch more videos like this, if you want to learn more about the stock market, the crypto market, day trade live with me every single day. We've been making so much money in this market. It's so even funny. If you follow the Instagram page, you see we've just been killing it. So if you're struggling, hey, feel free to join the chat room. All links down below. Leave a like, subscribe, and let's get into the video. So first and foremost, I do want to touch base on Bitcoin. As you guys, Bitcoin has been pretty much hanging out in this range. It's kind of downtrend from pretty much the beginning of the year. Topped off in November, kind of similar with the stock market. They both topped off around November, December into coming into the new year, and pretty much being on this downtrend. Recently, Bitcoin kind of was trying to push higher, but as you can see, get rejected on this pretty much kind of a triple top right here. And coming down, and what I'm expecting from it, nothing has really changed. If you watched the video I made about a month ago on Bitcoin, I do expect to hit around that $30,000 to $28,000 range, and there I will be buyer. And I think that is definitely still probably having another leg down. I probably expect this to kind of chop around and pretty much come down, test this bottom trend line. But I do think around that $30,000 to $28,000 range, that'll probably be the bottom. That's where I'm buying. Nothing much more to it really that I'm expecting from Bitcoin. I just want to touch base on that because I know a lot of people keep asking about it. Nothing has changed from the other video that I made about a month ago. If you have not watched that video, please go watch that video. It's so helpful. It's probably one of the best crypto videos I made. And I definitely recommend everybody watching it. Now let's get straight into the charts of the stock market. Before we get into the stock market, I do want to touch base on the US oil. Like the US oil has pretty much been ripping. We saw it pretty much break out of this little on this weekly time frame that we're in. We pretty much saw it break out, kind of fake this breakout, but it had a massive wick. I mean, look how big this candle is. It's just a massive wick. And in pretty much going back in this 2011 range, as you guys can see here, right before up to 2008 year, the all-time highs for oil, and we're looking at the crude oil over here with the commodity. So we're back in this range, definitely looking like an extremely parabolic move, like we saw in 2008 when we saw those strong parabolic moves. We also saw it crash down just as hard. So something definitely scary. I do think it probably want to push higher in this couple weeks just because this was such a strong move up. It's hard to expect this move to be reversed so quickly. But definitely in this danger zone up here, we definitely want to have oil up here. Commodities kind of just being so strong. But like I said, 2008 when they're so strong, they tend to crash. Even if we go back to 2000, you see they made a pretty strong move up and kind of crashed down as well. Following the whole market too. We don't want commodities this high up. So, I'm still looking for them. Still think they'll be strong. But, we do definitely got to be careful with the US oil up here. I see a lot of times that the stock market tops off and then commodities quickly top off shortly after, and they kind of both crash together. Kind of like we saw here in 2018, we had a massive dip. Go back here in 2008, dip here. COVID, huge dip, of course, we all remember that. So, usually oil, the market, once they both are at the end of the road, they both tend to sell off massively. So, we'll definitely keep an eye on it. Definitely strong, definitely looks like it has room. Pretty much those all-time high levels, there's not much to it anymore. Now they broke through, could come down to retest this 110 and then push up. So, we definitely have oil on high alert on the watch list. And I do want to go over the business cycles. I do want to touch base on kind of the 6 phases of the business cycle, and it's kind of pretty much how the overall micro market really tends to really move. And right now, you can see down here, you see when bonds go up, stock and commodities go down, the market goes down, stock and bonds, bottom out, commodities are going down, and then, they all kind of go up as the stock market goes, as the overall economy is just going up, right? And then we start seeing bonds take a hit. It's kind of we're getting near that more of a topping off, and then we see bond stock taking a hit, and commodities still being strong. And right now, we're somewhere in between this commodity and stocks range. If I'm honest, guys, I do think the stock market is not done. I do think we'll be probably topping off one more time and probably coming down and crashing in the end of Q3 or maybe middle of Q3 of this year. So right now we see we're seeing bonds and stocks kind of both do go down as these commodities are ripping. So I think we're transitioning into the stage 5 right here. We're kind of somewhere here that we're nearing that topping off point. and then as we start seeing everything kind of calm down, the commodities, bonds, and stock kind of go into the bear market. And I do think this cycle of the bull market will probably be ending in Q3, because right now we're still not at the very top, because we are seeing these commodities kind of ripping. And commodities, talking about oil, gold, wheat, all those kind of stuff, corn, hog, you name it, and all those things have been ripping as of lately. You can name the Russia-Ukraine thing, you can name a whole lot of reasons why this is happening, right? But the matter of fact is that these are the cycles, and it's kind of what we gotta go based off of. If we don't trade the news, we trade the charts, and this is what the charts are telling us right now. The other thing, we're in transition to stage 5 right here, pretty much hitting a climax, and I do think we have one more last push into the stock market. And after that, I think this will probably be happening around Q2, Q3, topping off, and heading into that the bear market. And during the bear market, everything goes down. Commodities are not going to be up. So this kind of like where I'm at on the stage on the micro side. And I've been kind of on this for a while. I do think I've been bearish since the beginning of the year, rightfully so. But I do think we'll be bottoming out soon, and I will be showing you guys when and where I think we will bottoming out. So make sure you watch this whole video. I also like to take a read at the stage 4 and stage 5, so you guys are aware exactly what it is. Why am I thinking this we're entering the stage 5? Shout out to schoolstockcharts.com. They have this article. Go check them out. Whatever. Stage 4 marks a period of full expansion. Both stocks and commodities are rising, but bonds turn lower because the expansion increases the inflationary pressure. To combat this, interest rates start to move higher. And we are seeing these interest rates starting to move higher. We're talking about, the 0.25% increase, the, half a point increase the Fed's meeting are going to have in this middle of March meeting. And, that's why I'm saying, the interest rates are going to move higher, and stage 5 is, kind of into that topping off phase. Stage 5 marks a peak in economic growth in the stock market. Even though the expansion continues, the economic growth at a slower pace because rising interest rates and rising commodity prices take their toll. And we definitely are seeing those rising commodity prices. They still haven't fully taken a toll on us, because oil just now is ripping. All these kind of commodities are now ripping, and very soon we'll see those the monetary toll really take a toll on people. Stocks anticipate a contraction faced by peaking before the expansion actually ends. Exactly. So we're gonna have one last peak before the expansion ends, and then come down crashing. Commodity remains strong and peak after stocks. That is something that we see every single time. We've talked about it. You see it. The stock market peaks, commodities push a little stronger, then they come down crashing, and it happens over and over again. We technically could be in stage 5, somewhere in like the beginning stage of stage 5. We'll kind of see how that plays out. And then stage 6, moving into the bear market, right? Now let's take a look at TNX. TNX, the 10-year Treasury note. Pretty much we're looking here on the monthly chart, because I want to show you guys that we pretty much have been just a downtrend channel, right, since the 80s. And it goes up, goes down, goes down, goes up. We hit the bottom here, with the interest rates being super low, and then we kind of been pushing up, and it looks like we want to top off here. And this is why I think we still have some room up, because the Treasury yield, the bonds market definitely does seem to have another leg up. Same with stock market. For that, I can't say that we're fully in the end of stage 5, and I do think we have one last push left into us. I do think we'll push one more up to like this 2.3, 2.4, maybe 2.5 area, and then kind of come down crashing after that. If we zoom more in on the daily time frame, we've been talking about the TNX, TYX for a while now. Let me switch my tool. So if we look at the daily time frame, we see that we made this cup and handle pattern. We kind of been playing this out like pretty much to almost perfection since we've been watching this, right? Cup and handle pattern, strong breakout. We had this kind of rising wedge here, came down, retested the breakout level, and now definitely looks like it wants to go up, right? So if you guys see, if we have this move up, definitely wants to head to the 2.3 range, right? And I think this will be happening in the next week and a half, 2 weeks. Probably topping off near the March 15th, March 16th date when the Feds have their meeting. And if the 10-year Treasury goes up, it means usually stocks go down, right? So if stocks go down, we can expect some rough next 1 to 2 weeks, which I do expect us to have a rough next two weeks. That been pretty much bearish this whole time, but I do think this will be the last leg down, guys. I do think this will be the last leg down until we do start pushing higher into the Q2, Q3 to have the last top off. So I pretty much do expect us to kind of like what happened here, being pretty much shorting this whole way through. If you're in the chat room, we shorted super heavily and we just made so much money shorting, right? But we're still higher in this downtrend range, and what I do think we'll have another leg down in the next couple weeks, and I do think they will probably come down here to at least fill this gap. Could go a little lower to the maybe 398, 390, high 390s. Definitely fill this $400 gap right here. Then push higher and maybe set up like somewhat of an inverse head and shoulder pattern here, and break out and push higher after that, and see that maybe top off near the 500. Maybe 500 could be the exact top in that Q3 range, right? But I do think we'll have one more strong leg down, reversal, a strong reversal into Q2, leading up to a climax in around Q3, and that's when we see everything kind of come down and crashing and head into a bear market. That's kind of like my thoughts going into it right now, kind of like what the charts are, where the macro is showing us on the on the micro side, and there's really no way around this. If you guys think about it, I mean, the Feds have just printed so much money, there's just so much uncertainty that there's no way we're not gonna get a bear market at some point. I do not think this is the current, like, the top. I don't think this was the top here. This is pretty much 477, 480 range that we saw here in the beginning of the year. I don't think that would be the top. I do think that stock market, crypto market do have one last strong push up. Same thing with crypto. I do think we have one last strong leg up before we see that tank down. We should probably see some kind of climax and kind of like euphoric push up, and people thinking like, okay, no more bear market. Because people think we're in a bear market right now. And people think, oh, okay, we're done with the bear market. We can go all in. In reality, it was a trap. You FOMO'd in and got dumped on because you sold everything at the bottom here, get back in when you're trying to push for all-time highs because you want to FOMO, and get trapped again. So this right here, I'm starting to look for longs around the $400 range. Around there, I'll probably start looking for like some really heavy longs to try to catch the next move up. But I'm just not trades that I do plan to hold for like super long term, I guess. More like some kind of monthly swings and type of scenarios, of course, with the day trading. That doesn't even matter what the stock market is really doing. That's probably the safest approach you can do is day trade, because you don't care where the market is going, up or down. You just make money either ways. Same thing with oil. I don't think it's done topped off yet. I think you'll definitely have another push up. Bonds, same thing with the bonds. I see bonds and oil probably going up in these next 2 weeks, and then kind of start reverting once right after the Fed's meeting. And while the Fed's meeting, we'll see that SPY will probably have bottom out. SPY, Nasdaq, QQQ will most likely have more than bottom out and start coming back up. I think usually it's to buy the rumor, sell the news. I think this has been more like a sell the rumor, buy the news. People have been selling off leading up to the Fed meeting, but I think really anything the Fed meeting says will be bullish for the stock market because it is priced in. We know that you're going to do a 0.25 increase, right? Even if you do a 0.50 increase, they wouldn't even be surprised because that is what we were expecting. So this is definitely something that is priced in, right? So that's what I'm looking at. These are my thoughts. I'm being very bold by explaining it, like telling you the exact dates and when I think things will happen. But that's just how I am. I'm a bold person. That's why our chat room does well, because I'm not scared of making the call out, taking the trades, taking the plays, and putting myself out there. And I think a lot of people really like that, right? And a lot of these other creators that could go up, could go down. Technically can, but tell us your exact opinion. You guys know exactly what I'm talking about. But it's kind of like what my thoughts are leading to these next weeks. I definitely think SPY, another leg down, oil, and even if we look at the DXY, which is the US dollar index, we see that it's been so strong, right? DXY hasn't been this strong for we're right above that March 20 before the crash highs, going for that $100 range again, probably not going for this 100.6, and this is like some huge candles we've seen recently from the DXY. And when you see DXY really go up, you see a lot of the stock market and Bitcoin both struggle. So I think they'll continue to struggle, and then we'll start looking for a reversal in about 1 to 2 weeks. This person what I've been thinking. You guys don't have been pretty spot on. I mean, I've been bearish since the beginning of the year on the S&P 500. I've been telling people not to buy the dips. It's been working out for us. If we take a look at the QQQ, getting beat up even harder. You see that we're kind of like coming down to trying to retest this the second time, and we'll see if this doesn't hold. I do expect us to bounce on it. Hopefully, I'm saying hopefully bounce on it. Maybe bottom on this 325. If not, we'll definitely be going in, which is totally fine with me. Like I've been mentioning to everybody, falling back in this bull run here from 2008 doesn't make this a bear market. It just goes back to the average mean, right? We overshot this because interest rates were so low, and tech loves that. We'll probably just be falling back in this, this bull run, and just keep trending up. And then if we do fall out of this, which we will, I'm sure at some point, if we do eventually like come back in here and whatever, chop around, go up, down, whatever, and we eventually fall out of it, then yeah, definitely be a bull run. There'll be eventually, as we move up, it'll be more and more. But that's all I'm looking at for now. Still feeling bearish on the stock market and the crypto market leading up in these next 2 weeks. And I do think we'll be bottoming out on those around March 15, March 16, right? And it will start seeing whatever on the news, whatever the news is gonna find to say, okay, now we're bullish again for this and that reasons. It can be the Russia-Ukraine thing, it can be the Feds, it can be this, it can be that. It doesn't matter. Like I tell you guys all the time, do not trade off the news. The news is just there to find a reason why something is happening where the technical analysis had known before, right? So there's no reason to, try to catch the latest news article. I try not to keep up with those too much, if I'm honest with you guys, and I'll be doing just fine. But anyway, let me know what you guys think. Let me know, are you bullish, are you bearish, are you buying the dips here, are you shorting? Let me know in the comments down below, and I'll see you guys all in the next video. As usual, peace.